Hey guys, how's everybody doing today? Can you hear me? Awesome. Okay, great. So I have been getting a lot of questions about how I trade, how to write a trading plan, how other people should write their trading plan. Really just a lot of questions involving trading plans. And, you know, we always say here at Simpler Trading, you absolutely have to have a trading plan, and it's one of the best ways to be successful. So I thought that I would take this time to go over my own trading plan, which has not been updated in about a year. So you guys are going to watch me update my trading plan, and I'm going to go through some of the finer points, and then I will share it at the end. So that's kind of the plan for this. I did post 2 resources up there in the top left-hand corner of the chat that you can download, and these are going to be basically what I used for a guideline to create my own plan. So if you start by looking at this first one, it's called the blank trading plan. I can pull it up on my screen here. We start by looking at this. This is really where it started. Let's see here. This is how I started this entire thing. So how many of you guys have a written trading plan? Yes. So does that mean we have a lot of no's? Kevin. Well, either way, if you have one or if you don't have one, it is recommended definitely to get it, to write it down. You don't have a dog. It is definitely recommended to write it down and really just hone it over the years. So, I mean, I wrote mine the first time probably about 3 years ago, and my first trading plan said, follow John. So that was where I started. I started completely from scratch. Yes, I shared the form. It's in the top left-hand corner of the screen in the presenter's post. So you can just click right there and you should be able to download it from box.com. And then yes, I will share my plan once I am finished with it. Hold on, somebody's in the wrong room. 1 second, guys. I'm getting alerts from the other trading room. All right, maybe just give them a second. It is a little confusing that we do the members webinars in here, but we do that because not everyone has access to the gold room, and the silver members have access to the breakout room. So we do them in here so the silver and gold members can also participate if they would like to. All right, so anyways, going back to this, as I was saying, I'm going to start from the beginning about how I kind of put my trade plan together, and hopefully that will help you formulate yours. I can answer questions at the end, and I'm going to share my trade plan at the end and kind of just tell you a little bit about that journey. So in the very beginning, when someone told me to write my trade plan, I had no idea what they were talking about, okay? And I'm like, what am I going to write in a trade plan? And my trade plan, like many new members who come to us, was literally follow John and follow Henry and see if it works and if it doesn't, right? So that's exactly how I started out. I started out just like everybody who comes to us. And that's why I really try to create stuff that would have helped me when I was starting 1 or 2 years ago, and those things that helped me get over the humps. So that is my entire goal of being here. And, you know, obviously, like, trading is very difficult, and it was very hard for me in the beginning. And I have gotten past the hump, and it's awesome now. So I just hope that I can share anything that I have learned with you guys. So in the very beginning, like I was saying, when I was just following the other traders, I mean, I really had no idea what I was doing. I paper traded the setups. I have notebooks upon notebooks of writing down what is the spread and what does bullish and bearish mean and how do I calculate this exit and this and that. And it was very hard for me. And I paper traded, thankfully, for 1.5 years, and my dad helped me a lot understanding all of this beginner stuff. So that was really how I got over the hump. As far as following, you know, I am the ultimate follower. I came here as one of you guys, and I have followed every single one of the traders that is with us today and some that aren't with us anymore. And every single one of them has been a mentor of mine. And what I have done through that is I just take bits and pieces of what each one taught me and what resonated with me, and then I kind of combined it and put it together in something that works for me. And that is really the goal for all of you guys. So, I mean, at this point, I don't really follow exactly. I will take some of the trades, but for the most part, I do adjust for my own account and risk parameters. So anyways, just starting at the beginning, these are the basic things that you should definitely include in the beginning of your trading plan. You absolutely should know, why are you trading? What is your approach? What are your goals? I'm a lot different than a lot of the traders that I talk to because I'm young. You know, I'm not planning to be retired next year or in the next 5 years, and I don't have, you know, a very large account that I'm trading with as far as, you know, a retirement account that I'm trying to grow slowly. This is literally my savings. This is what I have. And instead of having it sitting in a savings account earning like 15 cents a year or whatever it is, I have it here and I'm making my money work for me on a daily basis. So that is my goal. I use it primarily as income. You know, when I have extra things to pay for, like we just moved into a new house and bought a washer and dryer with that. So things like that. My son just had surgery. That was not cheap. Kind of extra expenses that come along the way. It's really nice to be able to take that out of a trading account without having to dip into the your main salary that you make, right? So for me, those are my goals. I try to flip that money quickly. I like quick trades, but I don't like day trades because my account's not big enough to do day trades. So I generally go about 2, 3, 4, maybe 5 days. More than that, my patience is wearing. My patience is wearing, but, you know, I do have to stick out the setup. So let's see. All right. What are my objectives? So those are my objectives, long-term goals, and this is written in my trading plan down here, which I will get to in just a minute. I just wanted to go over this basic guideline that I have right here. All right. So what markets will I trade? Are you guys pretty clear about what markets you like to trade? As far as the markets that I like to trade, I'm kind of a mix of Henry and John. I do like to, and here's my trade plan right here. I'm just going to add some stuff here. As far as markets I trade, I do like to trade the bigger stocks. Yeah, any big liquid trending markets. Exactly, right? I can write that just like that. Any big liquid trending markets. I do, however, John really likes those really high beta stocks. I mean, you're not going to find me buying calls on Amazon or Tesla. That's not going to happen in this account. But I do watch those and I trade those, and I'll do that via spreads. I'm not going to do that via long calls. So I don't mind going with the ones that are a little slower movers. Like I have a trade in T-Mobile right now and Microsoft, Boeing. Those are going to move a little slower than the NVIDIAs and Teslas and Amazons that we see a lot. So I'm totally fine with that. If I am going to trade the bigger name markets, then I will do it via spreads. That's pretty much how it goes. But the main thing here is trending. I am absolutely a trend follower. I do not like counter trend. Not a fan of counter trend. Not to say that it doesn't work. Not to say that counter trend doesn't work. It absolutely does work sometimes. But, you know, I have a small account. I have a lot of things that I do during my week. I'm not just trading all the time. And even if you are able to trade all the time, as I am, it's not really good if you're trading all the time. It's better if you just pick out a few setups that are very high probability and stick with that. And that being said, counter trend setups are by nature lower probability. That's why I tend to nix those. Hey, Jim. You missed the first few minutes of the presentation. Can we download your plan or one that is completed? Yes. So my plan, I'm going to write it right here in front of you, update it, and then I will give it to you guys for download. And yeah, I'll definitely get into the account size and the risk management and all of that. So that will be coming up here soon. All right. So what time frames do I trade? Time frames. Pretty much I've found that it doesn't really matter what time frame you trade. It just matters that you stick with it and you know what works for you. Is that better? People always tell me different things. Oh, you're too loud. You're too quiet. I'm not sure. So yeah, thank you for telling me. Is that better? Okay, great. All right, so like I was saying with time frames, I don't think that it really matters what time frame you're trading. It just matters that you're consistent with it and that it fits with your life and with your schedule. Like I was just saying, I generally am only in a trade a few days. I really don't do day trades. So I stick with usually the daily chart, 195-minute chart, and then the 78-minute chart. And of course, I'm sure that you can see that these are JC derived because John has been my primary mentor. And so a lot of this does come from John with kind of my own twist. So for my swing setups, these are the time frames that I use. Sometimes I'll look at a 30-minute chart, but I mean, at that point, it's not that important to me. For the time frames, is this the chart time frame or days you hope to grow the trade? These are the time frames that I have on my charts. So when I pull up a chart, this is what it's going to look like. I have my daily chart here, 195-minute chart, and 78-minute chart. So these are the charts that I always look at the same time frames for a trade. And then that being said, when I'm finding trades on these chart time frames, primarily these larger ones here, my trades typically last about 2 to 5 days, maybe a few days longer. Yeah, I can make it larger. There we go. Maybe a few days longer for credit spreads. However, I buy options about 23 days till expiration in case the trade lasts longer, or and mainly to avoid theta decay. All right. So it's really just good if you just define your time frames and you find something that works for you. Some people, this is way too short term for them, and that's fine. That's completely fine. You should trade however you feel most comfortable, but these setups, they can be applied to any time frame. So that's why I love the setups that I trade with, because it doesn't matter if you want to, you know, when you're using the squeeze and you say, hey, I don't want to be in a trade for 2 to 5 days, I want to be in a trade for 3 weeks, that's fine. Then you just look for a confluence of a weekly squeeze with a daily squeeze instead of a daily and a 195 minute. But either way, it's best to just figure all this out and write it down so that you can have your plan and stick with it. All right, so these are just kind of some basics at the beginning. Really, the most important part that you get into is going to be your setups. And whenever somebody calls me on the phone and they tell me, because, you know, I talk to a lot of the new members, and I talk to a lot of the new members, and they say, oh, you know, I'm losing money, and I took this trade and that trade, and I don't understand what happened. And you know, that's very common, and I know how that feels, because that's exactly what happened to me when I first started trading, and I had no idea why, and I would just follow the text alerts, and I didn't know when to get out, and then it would go down a little bit, and I would panic, and I would get out, and then John turned around and turned it into a triple win. You know, it's very frustrating, but part of a huge part of that is being new and understanding that you need to learn to recognize the setups and define them very clearly, and only take the ones that you like. So that's just something that I'm really trying to work on identifying throughout all of my sessions is, hey, what is the setup here? Okay, is this a strong setup? Is it a weak setup? How much money should be risked on these setups? So for me, I have a few different setups that I use, and some of them kind of overlap. I'll get down to the, let's see, are you talking about high short interest or option open interest for the options chain? We can definitely get into that. But okay, so as far as the setups goes, I mean, they're really an even favorite. I have Fibonacci price clusters or symmetry setups appearing on the daily chart. How many of you guys follow Carolyn's work? Or Henry? Both? Yeah. So do you guys know what I'm talking about when I say I'm looking for a fib setup? Could probably put some examples in here. That's a good one. But this is one that I actually took, so I'll use this one as an example. So when I'm flipping through Carolyn's charts at night, one of the main things I'm looking for is I'm looking for a bullish stock, because the market's going up right now, right? So if we were in a downtrending market, then we'd be looking for something that's going down. But when I took a look at this T-Mobile chart, for the most part, we have maintained a pattern of higher highs and higher lows. Yes, this is not great right here, definitely not. But you know, this is an art, not a science, and what we're trying to do is just really narrow down the best picks. So If it was going like this, I wouldn't want to buy it, but this one was acceptable to me. So especially because we did come back and start maintaining this buy pattern. So this one right here is a Fibonacci cluster setup, which you can see because she has these overlapping lines right here. And this is just telling you that this is a high probability support zone. And if it triggers off of this area, you have a high probability buy setup. So you're going to see these on both Henry and Carolyn's charts. John doesn't draw them on his own charts, but he does use Carolyn's work. And I don't really draw a lot of mine on my own. I use mainly Carolyn's, but I am working on a little bit more of that. But there's just only so many hours in the day, you know? So anyways, I should just add that right in there. My example for my Fibonacci cluster setup. So here is a Fib cluster setup. Insert picture. That way, when you guys have this later, you'll know what I'm talking about. All right, here we go. So here's my Fibonacci price cluster setup. Right here is a setup zone. If I pull up my Thinkorswim chart, so Carolyn's nightly charts can be accessed at FibonacciQueen.com. Her site is a separate service. You guys are obviously all members of Simpler Options, so you do see Carolyn. You do see Carolyn in the trading room on a daily basis, and she is in there sharing her setups. So if her setups are something that you're interested in, or learning how to do the levels yourself is something that you're interested in, that's absolutely an option. But yeah, I mean, you can use her levels in the main room. And if you wanted to become a member of her site, you can go to FibonacciQueen.com and sign up for a trial there. And then you can download the chart packets every night. All right, so with this setup, and I'm going to add this other picture here too, because after I look at her charts in her area, then I go and look at my charts. So here's my T-Mobile chart. So when I say that she has, this is what I'm talking about when I'm saying this is, do you guys understand that what I mean? That this is like one of my favorite setups, when you have the Fib cluster setup, and then on top of that, when I roll over to my charts and I can see that we have a confluence of essentially John's work. So we have a squeeze setting up. Here's the cluster right here. And we also have this, the ready, aim, fire. So right here we have a combination of David's works, John's work, Carolyn's work, all kind of coming together on one chart. So when I say I trade like a mix of everyone, that's exactly what I mean. So this is one of my favorite setups. All right, so that's going to be my Fibonacci price cluster or symmetry setup, appearing on a daily's chart, sometimes appearing with a squeeze. So these setups on their own are perfectly fine to take. I like them even better when they appear with a squeeze, because they move a lot faster, and that's how I like my trades to move. So without a squeeze, I've just found that they still reach targets just the same, but they just move a little bit faster. And I really do like to get that pop, the directional pop that John has taught me to know and love so well. So getting down to the triggers, once you identify your setup, okay, that's the main setup, got to write that down. Now you have to figure out, all right, what trigger am I going to use to get into this trade? Carolyn uses the moving average cross on the 15 and 30-minute chart. I personally have found that I really like the Ready Aim Fire. So I use the Ready Aim Fire as an entry. You need to use it combined. You need to use it combined with the level or with the squeeze or both. But as you can see, you have the Ready Aim Fire, the squeeze, and the level at the same time. So to me, that's a buy trigger, and right here, I'm in. Am I cutting in and out, guys? No, yes, no. Okay, is this helpful to you guys? Okay, good. Hopefully it's helpful. All right, so that's my first setup. So then I come down and you have to define your trigger. So I am not disciplined in really anywhere ever. You can ask my dad. I was a wild child growing up. I don't like to follow rules. One of the reasons why I wanted to trade to begin with was because I didn't want a boss and I didn't want to have to go to work every day, and I wanted to do my own thing and sit on a beach and make money with my laptop. So it's very ironic. It's very ironic in my trading that I am so disciplined, and the reason why I do it is I like to make money. So and I found that the best way to trade is to be disciplined. So see, okay, so how do you create a setup? So that is part of, it's not really about creating the setup. It's really more about finding the setup. So charts are setting up all over the place. And that's why we use scanners a lot of the time. You can use a scanner, you can use a watch list, and charts are going to be setting up everywhere. You just have to find them, and finding it is a huge part of that. And I can definitely go over that at the end, but I want to go ahead and get through these setups first, and then I can go about kind of how to find them. So, but a really important part is how to recognize them, which is kind of what I'm going over. So, all right. So anyways, and you guys are going to have this document afterwards to refer to, and hopefully it'll be really clear and you can ask me questions about it later. All right, so my trigger for the trade, 195-minute chart with the overbought, oversold. So all that means is that, and I can give you a document about how to read this Ready Aim Fire indicator, because if you're going to be paying attention to my trading, I use it all the time. So this 1.2 level here and this level right here, can you see that? Let me make this bigger. Oop. Okay. Okay, yeah, let me grab that instruction manual on how to read the Ready Aim Fire. So anyways, just to go over it briefly, this level right here, where this blue line is the oversold area, and this is the overbought area. So essentially when something, the idea is that, you know, that, okay, you're T-Mobile, right? So T-Mobile's coming down. You think, when will this end? Well, that's why we have the Ready Aim Fire, because it tells us, hey, this is oversold and it's ready for a correction. So then from there, it starts to bounce. And then it works the same way. That's really more for a correction or for a reversal. But when we do have a squeeze setting up at the same time, you're in a period of consolidation. So you're not overbought or oversold. So you can't get into these areas. So that's why the signals remain at the mid-level, but you can still use them for triggers in that area. So just looking at this example, I mean, this is very, very oversold down here. This one is very overbought. Those arrows are cut off a little bit, but see, like right when it reached this high up here, you get these major sell signals, and it's telling you that this run was over with. Okay, so that is my setup. So what do I do when I get that setup? That's my setup. That's my trigger. What is the trade? That is always the question, right? So I'm going to update this. All right, so what is the trade? The easiest trade here is selling an at the money credit spread in the opposite direction of the move. So this doesn't always work due to the different premiums that you can get. But the most consistent and easiest way to play a directional setup is going to be selling a put credit spread right here. So that's always my first choice. I always try that out first because it is the highest probability way to do it. My second choice is going to be just buying the calls. So let's see, when a strong squeeze is present on the time frames mentioned above, you can also purchase Delta 70 calls expiring 23 to 30 days out. So that's really going to give you hopefully a good amount of time for you at least to reach some of these lower targets. Depending on how much volume they have and open interest, you might have to get a different expiration date than the one that you like. But you know, that's just something that you have to look at when you get to the options chain. So that's one of my favorite setups. And yes, Spence, the squeeze definitely does go up or down. See if I can get a good one for you. All right, so here's a bearish squeeze on here. We have these red dots, that is the squeeze. So when price is in a consolidation mode right here, that's where we want to be entering our position. Right when the dots turn to green, this is the squeeze firing. So as you can see, price went down, boom. Yeah, Miles, and absolutely you can buy a debit spread. That's what I did with Baidu today because you know, I didn't want to buy calls on Baidu. So you can absolutely buy a debit spread about 23 days out. You don't have to do it as far out as the calls just because it's not as affected by the theta decay as the calls are. But you can buy a debit spread about 15 to 23 days out. Use about Delta 60 and 30. So you can absolutely do that. So those are kind of my three choices when I get a long setup like that. With the entry, you definitely want to be entering as close as you can to the 8 EMA. So I, for one, don't like to sit through pullbacks. You can't see the EMAs very well in here, but you do want to be entering as close as you can to the 8 EMA. This is the average in the stock market. This is where everything returns to. So if we wake up tomorrow and North Korea did something crazy or whatever, even the strong stocks, if they pull back, they're going to pull back to their 8 or their 21 EMA. So something happens, it pulls back. That's just a normal pullback. We hold through that. But if you entered at an extended point, you're going to be hurting a lot more. So I don't like to do that. So I like to work on my entries. Then you have to understand your management. Your management for each and every trade. For me, my exit point for spreads, I will stay in those unless the support has been broken. My target profit is 80% of profit, or I take it off if it's getting too close to expiration. It doesn't really matter how you do it. It just matters that you write it down and you stay consistent with it. And then For the calls, if I just have calls or puts by itself, what I generally do, I use a lot of Fibonacci extension targets. So I will take the first batch off when I'm at about 70% of my way to the 1272 extension. So the, like, okay, I had this Microsoft trade on today. This is really a perfect example of how I do like to do it. So I had this Microsoft trade on. It's kind of a lot of lines on here with the voodoo lines. Let me just take that off really quick. Makes it hard to see. Okay, so and then I can take off these fib lines too. All right, so for example, on this Microsoft trade, this one still could have more to go. I bought calls in this one. I think it was yesterday. I bought it right down here, right up against the EMAs. We had the squeeze, had the ready aim fire signal. But you know, in my experience, we normally what we get is the 1272. Yes, absolutely, we can get up to the 1618, but this is a lower probability target. It's definitely possible that we hit it, but you know, I don't really care, honestly. I'm trading small size. I have a small account. Yeah, if I could buy 10 contracts of this and if I could leave on half or something like that, then yeah, maybe I would shoot for higher targets. But with a small account, limited capital, this for me is perfect. Making $350 overnight in one trade when you're 29 years old, like, that's perfect for me. Thank you very much. On to the next one. So, I mean, for me, that's good. You know, I took off most of it, maybe around here, and then I took off the rest almost at the top, but that's perfect for me. So, anyways, that was good. There are also these instances that I have to point out too. So I was in this FXE trade. That was a great trade. Made good money in this one as well. And I took it off right at the 1272. And look, it did come up. It didn't quite hit the 1618. It did go up the day after I got out of it, which sucks. But, you know, I took the highest probability target. I was in it for this move. And that's what I got. And I'm out. So I'm happy with that. All right. I'm going to go over all the numbers. I'm going to go over all the numbers at the end when I'm doing my risk analysis. Is this helpful, Art? Sweet. Okay, so there's that. So Fib Queen setups for futures trades. Anybody interested in futures? Do I just eyeball the 70% amount? No, I mean, I can calculate it out. I will calculate it out if I'm trying to be specific about it, and then I'll just draw a price level there. But, you know, generally I just kind of eyeball it and I just look a little bit below the 1272 and I kind of calculate that right there. So I just kind of draw a level there. It's not exactly precise. All right, let me see if I can find a ES chart for you guys. I haven't been trading the ES as much lately. Just because I have been crazy busy, and this looks like a good one. All right, here's a good one I can add for you. Let's see. So I do take screenshots of pretty much everything. And this is how I save them. I do it by the date, the symbol, and then what the setup was. So that way I can just sort through my pictures and say, okay, these are all my trades in the ES using the RAF. So when I search for that, I have all of my images that come up at the same time. I can pick one out. All right, so my futures plan is actually very simple. I've learned a lot from Neil, and I do employ a lot of what he has taught me. But really, the futures day trading plan is very simple. It's really just, I mean, it's the same indicators that I use. I use Fibonacci support. So here is the Fib Queen support. I just go and manually draw it onto my charts. I use the 15-minute, 5-minute, and then I use a tick chart here. Oh, well, thank you, Andrew. I'm going to use that one for my next example. So this is what I do in the ES. Here's Carolyn level, okay? And then you have, this happens to have a squeeze here too, which is just kind of more of a bonus. But what I look for is I look for price to come down to her levels, and I want it to go with the trend. So if price is trending down for the day, then I'm doing sell setups. In this instance, you know, we were trending down into this 120-minute support, but this 120-minute support is very strong, and it tends to be indicative of the overall larger trend. So anyways, I was using this level here, and for my entry, I use the Ready Aim Fire on the 5-minute and on the 15-minute, and it has to be in confluence at the same time. So as you can see, this is 10:30, this is 10:30. You get both of these reversal signals at the same time. So then I enter as close as I can to this zone, and my stop is right below here. So I risk like 3 ticks using it this way, which is crazy. The other way you can do it is you can use the 377 tick chart trigger, which is all the way up here. So then you're entering here instead of down here. Like I said earlier, I like to perfect my entries because I don't want to have this risk. I'd rather have this risk. So that's why I use this and enter as close as I can to my stop point. Does that make sense? Does that make sense, everybody? Yes, no, maybe so. So here is the RAF buy sell triggers on both the 5 and 15-minute charts at the same time in accordance with CB levels or a squeeze. So same thing as always, you look to buy as close as you can to the 821 EMA. My stop, I would say 3 ticks below the setup zone you used. Yeah, don't buy extended things, especially in futures, because it is pricey. So let's see. Yeah, anytime Carolyn's levels have a squeeze at the same time, that is a boom, boom. All right, so exit point, when price gets to 50% of the 1272, take off half, and that's if you can even trade half. And that's why also that's why it's also good to learn how to trade futures, because when you have a small account under 25K and you can't day trade, you can scalp futures all you want. They don't have that rule there for whatever reason. So when I stopped worrying about the fact that I couldn't day trade, which was really a stupid thing to worry about, I just scalped futures all the time. And you know, I would scalp futures more, but I don't know, it's just, there's so many things to do, so many things to write, so many children to take care of. I need to pay more attention to my future scalping because I really love it. No, I don't use options on futures. It's just not something I have explored yet. All right, so there's that. I'm not going to go over this entire trade, but I am just going to leave it right here in my trade plan for you guys. This is a futures trade, ES trade that Neil taught me. really awesome trade. All of the parameters are here exactly as I use them. So you can go ahead and read through that. The squeeze stack trade, this is kind of like, so this is my plan from a year ago. So everything's a little changed now. The squeeze, stack trade, triple squeeze. This is essentially the confluence of squeezes. Confluence of squeezes. Stack trade, triple squeeze. So, oh, thanks, Jasper. I would love to do a futures class. I would love to do one of those classes with Neil. We were going to. We had it all on the calendar and everything. Maybe I should just remind him about that because it would be awesome. I mean, it's honestly, it's quick. If you have your set stops and set parameters, just like options trading, it's, I mean, it is inherently more risky due to the product, but I mean, especially on this past month where we've had crazy chop in the indexes and everything, these have been perfect days for day trading futures up and down in this way and that way. So that's why it's just another good skill to have. So, all right, I need to read this because this is probably not what I want. So, please pursue a class taught by you, refreshing or poach. Oh, thank you. Feel free to email anyone and tell them that. I will probably have classes coming up soon, but you know, I'm just now getting debuted in the trading room. So the response has been really positive, and you know, of course, everyone is looking at that. So as long as I continue to do positive things, I'm sure that I will be given a class to teach at some point, and I would love to. I used to be a teacher, so that's why I like doing this. But okay, finding setups. So the simpler futures room is separate from the simpler options room. And we did that because there were a lot of options members come. Okay, so everyone was together in the beginning, and people would come here looking for options trading. They're like, oh, why is there so many futures traders here? Oh my gosh. And then, you know, futures traders would come and say, oh my gosh, why are there so many options traders? I just want to trade futures. So as a company, we just decided, okay, well, we'll have simpler futures and we'll have simpler options, and then everyone will be happy. But, you know, they're both such awesome sources of content. So if you do want both of them, I'm sure you can talk to customer service and can figure something out there. All right, so getting back to my next setup, this is essentially like everything that John does kind of combined. So this is going to be really anything that has to do with the squeeze. So I usually find these setups either through, ironically, the room. People are really good at pointing things out, especially people who have been around a while. Admiral today, who I've been friends with for a while in the trading room, said, hey, look at Baidu, and I did, and it was great, and I took a trade on it, and that's one of the room trades now. So get setups from the room, the scanner, and then just also talking to other traders, which is really the same thing as a room. But you can use our scanner, or you can use TOS scanner, or you can just use a watch list. You know, I usually trade the same symbols all the time. So, I mean, I could theoretically just have a watch list and click down it and go through them and look. But, you know, I typically do use the scanner and the room, as well as John and Henry and Neil for finding these trades. Neil is excellent at picking out these setups, and so I always watch his sessions. Okay, so we're just gonna erase this because this has changed, and I'm gonna write how I do it now. Really just updated everything over the course of the past year. All right, so basically we are looking for We're looking for the squeeze. Okay? What makes a squeeze stronger? Squeeze is stronger if it goes in the direction of the trend. Okay, the squeeze is a trending indicator, so a higher probability squeeze is going to be going in the direction of the trend. So it's also stronger if there are multiple squeezes across multiple time frames. Okay, another way a squeeze can be stronger is if the stock that is squeezing is lined up with a squeeze in that index or in that ETF sector. So this is essentially the triple squeeze class, and we do have an indicator for that, but you also can just look it up at www.sectorspdr.com. Okay, you can also just look it up there and you can say, okay, what is moving right now? And this is how all the traders find their setups. So this was how I got to my Microsoft trade in the room. So Microsoft is a part of XLK. This is the technology sector spider technology ETF, right? And Microsoft makes up a huge portion. Microsoft and Apple make up a huge portion of this index. So that being said, when this index moves, Microsoft moves and Apple moves. They move together. So if this is gearing up for a big move, it's a good idea to look at the different stocks that make it up. So here we have this squeeze building, compression. We have my signal that I like for entry that was down here that I wish I would have entered with, but I didn't see it until like 3 days ago. I always hate it when that happens. So anyhow, when I saw this, Neil actually pointed it out in his stock pick, and hey, you know, XLK, way to go. So then I say to myself, all right, well, Microsoft is in XLK. And I looked and I saw, hey, look at this. Microsoft has a squeeze as well. So when they both move in conjunction together, it makes the move stronger. So instead of just having a squeeze on a stock by itself, you're making it more powerful by, number one, going with a trending bullish stock because this is a trend continuation indicator. Number two, matching it with its ETF. And with the overall indexes. So the NASDAQ has been doing really well the past 2 days. So you want to go with the flow. So I'm going to, oh yeah, and I think there was one more thing on this. Yep. So this one also, see, this is when I'm putting like, I should have put even bigger size on this one, honestly. But everybody has been so cautious about the NASDAQ. It's like, do I really want to do that? But, okay, so this one also had the confluence of squeezes. So this one had everything. Bullish stock, confluence of squeezes, and it's also lined up with its ETF sector. So this is going to be my third, I guess my fourth setup from my trading plan. Does that make sense? Does that make sense? Let's see, 7, 8, 31. So then I go save the image, MSFT, confluence of squeezes, and triple squeeze. So then I just name it just like this, confluence of squeezes, triple squeeze. And the next time I'm going looking for a confluence of squeezes, I can use that as an example. So I'm going to add that right here for you guys in the picture. All right, boom, there we go. So confluence of squeezes, stack trades, triple squeeze. So these are all really kind of the same thing, and you just really the more that you have, the stronger it is. So if you have, you know, in this case, we had 1, 2, 3 squeezes plus the XLK squeeze. That is a very strong, plus these entry signals here. But if I, for example, would just have 1 squeeze here plus XLK, then maybe I wouldn't be looking for as much as I got with these 2 also. So that also goes down to position sizing. So anyways, we're looking for the squeeze. Squeeze is stronger if, there we go. Okay, so in these are aggressive directional trades. I'm not as aggressive with Carolyn's trades because they tend to be a little slower moving. These powerful moves, I'm a lot more aggressive with. So with that being said, I like to sell at the money credit spreads. Let's see, with options, oh, that was weird. With options about 9 to 15 days out. You know, I really don't even do it that far out anymore. I would prefer to just stick with the 9 days, but sometimes you do have to go a little bit further out. And then purchase Delta 70 directional calls between, and I do go a little bit longer out now, 30 days. Try to enter, let's see, this is very important. Enter with RIF mid-level signal in confluence with the squeeze near the 8 or 21 EMA. Okay, simple, right? All right, squeeze point, enter, off. Okay, so management exit. Let me see what I wrote here. You know, I'll go with 70. Take off. Yeah, I used to be even more conservative. Take off half your position at 70%. And no, I'm saying take off 2/3 of your position at 80% of the 1272. Trail up a stop on the remainder. GTFO, if the squeeze is a dud and has 2 bars of lost momentum, yeah, this is, or price closes below the 21 EMA. Okay. All right, very nice. All right, very good. You know, I really don't do this 5-minute squeeze on the ES anymore. You can do, I do like a 5 and 15-minute squeeze on the ES, but I don't do 5-minute squeezes on the ES anymore. Art, it's not that I prefer the mid-level signals, it's that when you're in a squeeze, the way that John has explained this to me is that when you are in a squeeze, you're consolidating. So you're consolidating here. So price is not getting overbought or oversold. After you, if you notice here, after you've had this big move in Microsoft and price is up here, you do get the overbought signals. That's showing you, hey, this stock is super overbought and it's time to get out of this trade. But when you're chopping and in this consolidation, you're not either overbought or oversold. You're in the mid-level. So that's just how this indicator works. And when you get these buy signals in the mid-level, that is still considered a buy signal. And you know, Henry, Raghi, John, and I, we've all discussed this because that was not the way that the indicator was written. But once John figured out this mid-level signal, and I mean, I've been using that for almost a year and I use it in all of my trades. So I know that it works. And even if that's not how the indicator was written, I don't really care because I have screenshot after screenshot after screenshot showing that it works. And that's what I use every day. So it's not going to say that in the RAF manual, but I can tell you it works. All right, so getting back to this, I mean, it's really the same. I'm not even going to get into that really because I don't even do that anymore. the two earnings IB plays that I do, I'll go ahead and include these on here. I know not everybody likes earnings. The most important thing to keep in mind, I have my golden rules or trading commandments all right here. Very important to read. And then these are the you are screwed trading mindset. You got to read these and you got to figure out, okay, which one of these things am I not doing? You know, I did that and it really, really helped me. So I had that picture on my wall for the longest time. And I don't know, it really helped me. So I'm going to keep that in there. All right, now down to risk control. This is so important. I should probably have this at the top. So, as I was saying, for me as a trader, I have a small account. I trade with about $15,000. I don't, you know, I use it for income. So that means that I'm constantly transferring money out. I never put money in my account, ever. I haven't ever, not one time. So what I do is I trade, I like 17,000. I think it's a good number. So I take 15,000, 15K, trade it up to 17K, then take out 2K, then start over. And I do this cycle over and over and over. Why do I do that? I don't know. I mean, it's really kind of a mix. John says, hey, 2.5% a week. Henry likes to transfer out 1% a week. Some people do it by the year. This is what I do because I need money for things. You know, I'm young, like I'm starting out in my career. I'm not in a position where I just have money flowing everywhere. So I use this for a continual source of income. So maybe, you know, the time is going to come where I'm just going to leave it in there and continue to grow it. But at this point in time, this is what's working for me. So that being said, I keep my numbers the same because it's generally around 15K. Even when I trade it up, I don't really change my parameters that much because I just pull money out and then I trade it up again. So these are my parameters. Let me get out a calculator so I can show you. All right, so when you have $15,000, all right, our recommendation is that you never use more than about 5% in a trade. Recommendation, do not use more than 5% in a trade, okay? Right, so you come over here and you say, okay, how do we do this? 15,000 times 0.05. That's going to be $750, right? $750 equals 5% of my account, all right? So what if I go up to 10% of my account? That's going to be $1,500 equals 10% of my account. All right, so that being said, oh yeah, and then the earnings trades, I do even less. So 15, math is not my strong suit, guys, times 0.025. So what was that? $375. $375 equals 2.5% of my account. Okay, so these are okay, well, I'll get into that in a minute. These are the average position sizes that I use per percentage of my account. So when I have my highest, these are like what I do for earnings trades, okay? Earnings trades, maybe a trade that has like one squeeze and it's not really, you know, these are the meh trades. You want to get into it, but you know, like for example, I did this one. I didn't want to post this one in the room because I wasn't sure if it was going to work out. Like this one, this was an earnings trade. Let's see, what was it? Figure that out. So, I mean, this is one that I did this morning. And like I said, I didn't want to post it in the room because it was more of like a tester. Let's see. So this one was a income trade this morning. So, or not, sorry, not income trade, earnings trade. So this one here, it was an earnings trade. We had 2 times the expected move, more than 2 times. And when you get that, you usually get continuation. So I bought it right here this morning, and it's up a little bit. It's not up that much, but I only paid $200 for 1 call. And I mean, that's just an example of, hey, I want to try this setup out, see if it works. But I mean, I'm not going to throw the farm on it. The reason why I didn't post it in the room is because this is an extremely bearish chart. And even, you know, that goes against everything that I say, that I want to go with the trend. But that being said, John, he loves this setup, and I love it too. So, you know, you just buy calls when you have a gap up like that on earnings, and typically the volume comes in and just kind of keeps going up. So anyhow, but yeah, I mean, I only spent $200 on that trade. So I don't know. I hate to even give you guys numbers because it's just one of these things that, you know, it's one of these things. You guys know how trading goes. Today I had an awesome day. Like this week, I made over $1,000 easily this week. I made almost $600 today. Yesterday I made $350, and the day before I made $350. So, I mean, yeah, this week was awesome. And for me, that's awesome. I mean, it was funny. John came into my office and he was laughing at me, and he's like, "Why are you trading 1 and 2 contracts?" Well, you know, that's how I do it, John. And I'm good at it. So but yeah, $1,000 in a month is definitely doable. You know, it's the other thing too that's hard to say is I have been just crazy moving around. Like I don't know. Here, I'll just show you guys. I hate to even do this, but yes, you can do it with a small account. Like you can. It takes time, but all right. So if you look at this, this is a trade we put on in the room. It's up $30. Baidu, this is a trade I put on in the room. It's up $100 today. Like you do not need to be buying calls on Amazon for an extreme amount of money to make money trading. Like that is not what you need at all. All you need is to identify high probability setups. You need to control your risk and put small amounts in every single trade. Like this trade, I think this trade I only risked like $250 maybe. This Baidu trade, I risked more. I risked about $800 in this trade. All right. This one's just taking off. I'm already up $100. This one, Facebook, I really wish I would have posted this one. I'm just to the point where I'm just now starting out posting trades in the room. So I'm kind of getting in a good groove. I've been trading by myself for 4 years. And really, I just started posting trades in the room last week. So it's a completely different thing. I want to make sure they go well and explain and all this. So I'm just kind of getting into a groove. But this Facebook trade, I mean, $100 today. This one was only risking about $250. So here I have 250, 500, that much. These ones are just stock. This is just sitting here. So The exception to that is this CTRL trade. That was one of Henry's. So that one, so this one of Henry's, like this CTRL trade, I'm up $125. Hey, I'll take that on 100 shares of stock. You know, I'll take that any day. The Boeing one is the only one that's hurting me. And the funniest part about that one is I thought that was a great trade. I'm the one who told John about that trade. And poor John, this is down, but I still think it's a great trade. So Boeing, I think it's fine. But I mean, I'm not getting crushed. I'm never going to get crushed. I have one call that I bought for $600 and something. This Facebook call, one of them for $750. Like, you know, so I have more positions on than I normally do. And that's because I've been doing live trading sessions in the room and people want trades. And when I find trades and when I'm sitting here looking for trades for you guys, I want to take them. But I mean, looking at this, like to make $600 today, like that's amazing. That's awesome, you know? So I'm just trying to show you guys that with a small account, it is possible. And it is a lot harder because you have to be very specific about your entries and your exits, and you have to be very disciplined. And that's why I try to do the risk reward things that I do. I only buy like these small calls, really, like these calls for $2.90. But like this one, I was saying, I bought this one for $200 this morning. So I am a little more over allocated than I should be right now. I generally don't like to risk more than about $2,000 in my account at any given time. And I do have on more than that at this point, 250, 800. Yeah, so I probably should take some of these off, to be honest, but every single one of these is a good solid setup. I have my stop in place. Yeah, I mean, this was a really good day for me. $300 day is a great day for me. So I mean, when I first started doing this, I aimed for $50 a day. I wanted $50 a day, no more than $100 loss. And Chris Sprecher, who's an awesome mentor to me, he was like, come on, you know, just go for $50. You don't need to be doing this crazy stuff. Go for $50. And I was like, all right, okay, I can do that. So I started and I got $50 a day. And then I moved it up to $100 a day. Then I moved it up to $150. And then I started, you know, okay, let's do $200 to $300 going for that. And now that I have gotten so much better at what I'm doing, and I'm more comfortable because I mainly only traded spreads. And now I'm doing a lot more of these long calls in the right spots. I'm able to exponentially get that even more. So yeah, I mean, this week, and this has been a really good week. So, I mean, it's not always going to be like this, obviously. And like the last 3 weeks or so have been hard. Like John's been having a hard time. Like all of us having a hard time with the chop. But I mean, this is a good week. So yeah, I mean, 1,300 this week, which is really good. I'm happy if I make $600 a week. I'm totally happy with that. $600 a week times 4, an extra $2,400 a month. Like in a lot of places, that's a starting salary. So that's a lot of money, and really, it will just grow from there. So, anyways, I hope this has been helpful to you because I hate showing my account, but yeah, I mean, this little stuff adds up. These high probability situations with nice plays, they add up, and, you know, cha-ching, right? So there you go. That's pretty much the end of my trade plan. Does anybody have any questions for me? I'm going to save this and I'm going to upload it. God, why is this doing this? Father Stevie, are you still there? So I saw my dad in the room tonight, guys. He's the one who got me into this in the first place. I would never be here if my dad didn't come home one day and say, hey, I know how you can work from home and take care of your son. John Carter. I thought he was insane. Like, what? You want me to put the only money I have to my name in a trading account? Like, TD Ameritrade thought I was crazy, and they're like, we're not giving you options permission, you 25-year-old single mom. Like, what? Are you insane? Like, Thinkorswim literally laughed. But, you know, this has been the absolute best thing I've ever done. And yeah, I mean, I don't know what else to say. I'm so grateful that I'm here today. I'm happy that John wanted me on board, and boom. Well, Sunny, if I could figure out how to sign into my Microsoft account and upload it, then I would do it right this minute. But I'm not good with technology. Okay, let's see. How do I save this thing? It's because I try to save everything on the cloud, and I moved to Austin, and this computer, yes, this is all recorded. It will be uploaded to the members webinar area. Let me see if I can save this for you guys and hopefully upload it right now. Trade plan, August 2016. Oh, oops, sorry, August 2017, my bad. Yeah, Spence, everything is recorded for sure. All of my webinars, I've done them all on a different topic each time. And they're in the, if you guys had to go to the member webinar area to log in, well, that's exactly where they are. So all of the recordings are right there. I think I'm just going to save this as a PDF, actually. Save it as PDF. All right, give me 1 second and I will upload this to box.com, and then I will share the link with you guys. Kevin, my friend, thanks for coming to my webinar. Are you still there? Aw. So Kevin is my one of my best trading friends ever. My dad brought me to, he took me to one of the mentorships that Simpler Trading did like 3 years ago. I guess it wasn't 3 years ago, November 2015. And that was where I started kind of creating a group of trading friends, because as we know, trading is very lonely. And especially if you don't have anyone that you know that does it, it's kind of boring to talk to people about and whatnot. So anyways, I met Kevin there, I met Rodrigo there. I mean, I came in exactly like you guys, probably even worse actually, because I had never traded stock in my life. It's funny, I never did again until Henry put that CTRL trade on, and told him, what, you're gonna trade stock? And so yeah, I mean, I'm a teacher. I used to teach elementary school. I taught English, math, science to 6th graders when I lived on the beach in Costa Rica. And yeah, I mean, this is what I'm doing now. So I'm glad everybody likes it because I love it. Let's see. Just reading it over one more time, making sure it's all good. Okay, there we go. My trading plan link. So feel free to download that. And yeah, I hope this helped you guys. I will be in the trading room tomorrow. Hopefully I'm going to get more sessions. They let me have my own time now. So all of your helpful comments, all of your comments really help me. You know, and of course, if you guys like what I'm doing, it's always great to know that. And then that gets me, you know, I'm able to get more time with you guys. So yeah, Kevin can remember me from the beginning of my trader journey. Well, thank you everybody so much for coming today. I had an awesome time. I'm glad this was helpful, and I will see you around. Have a great night.